Good morning, everybody. Welcome to the Saturday morning real estate marketing show with Ruthie Rocks, Ruth Allbrand, and I am Marketing Max. Today, we have a repeat guest. Sheila Merrill from Nova Home Loans is with us again today, and she's going to dive a little bit deeper into this Hope Brings You Home loan program right now, which is timely because I don't know if anyone's following right now, but interest rates on mortgages have dipped to an almost 8-year low right now. 30-year mortgages are averaging right at 3.25, 3.12. So get your buyers ready because it's shopping time. So, but before we dig into all that, Ruth, what's happening in Las Vegas this past week?
Well, people are buying, that's for sure.
Yes.
To the tune of 96 homes a day, and that's just the resales. And the new home market is probably another 10 a day.
Okay.
I think this year it's going to go up a little bit. It was down at 7. But anyway, people are buying homes. It's over 100 homes are being sold here in Las Vegas every day. And I think with your information this morning about the interest rates that we're even going to have more sales. But to date, from January the 1st, we've sold 5,715 homes. And that's compared to last year where we sold 4,912 homes. Speaking of last year, the average price was $318,000. And this year, the average price is $333,000. God.
The pace of sales is higher this year. You said 5,000, a little bit over 5,000 versus under 5,000 last year at the same period of time.
Wow. Yeah. We've sold 800 more homes in the past 59 days than we did last year, the same period.
Wow.
And the homes are all of a sudden just flying off the shelf. And I think, a lot has to do with California moving here. I just always have to say that, and all the jobs that we're generating on the Strip and around the valley. So we're still in that perfect storm. So that's a wonderful thing. The iBuyer platforms, which I always like to report on. Last year, the iBuyer platforms were in the top 10. And they were half of the top 10. And last year, they were 65% of the sales in the top 10. And in the top 10, I'm talking about the top 10 transactions that were sold by realtors and iBuyer platforms.
Okay.
And so in the top 10, 652 homes were sold last year. And the iBuyers sold 425 of them. So that's 65% of the top 10 were iBuyer platforms. And this year it's up to 71%.
Wow. Okay. It's creeping up even higher right now.
I am happy to report, though, if you take the 5 iBuyer platforms that are in the top 10, Aaron Taylor is number 3 in the top 5. So kudos to my partner, Aaron. And I always say he does a listing a day except on Sundays, but according to this, I think he's been working a few Sundays.
Fantastic. Yeah, his marketing efforts, and it sounds like his process that he shared with us a few weeks ago is working this year for him.
Well, and if you think about it, what I said is last year the average price was $318,000. This year it's up to $333,000. So if you think about it, there's a lot of homeowners out there that are seeing some increased equity and thinking maybe it's time to sell and move up, move down, whatever they're going to do. So the increase in the price always generates activity as well, especially when they're getting more equity. So absolutely. I think, like I said, we have a perfect storm here, and the jobs continue to come online. I know some of the major projects on the Strip that hotel projects are trying to get done in time for the Raider Stadium and being active. So I think we're going to see a lot of things going on, and this year looks like fantastic.
Yeah, a lot of boom, a lot of activity in construction for sure. They're all around town. So, all right.
And of course, the Virgin River is still going to break ground on the fast train. So we're going to see that in the next year or two.
What was the proposed date for completion? Was it 2024?
No, it was 2020. Well, there's 2 trains.
Okay.
The Virgin is not the Hyperloop.
Got it.
It's just a train, but it's going to go from Vegas to Barstow. And let's see if I do have that stat somewhere. I don't know if I have it today, but anyway, it's going to. I'll find it. It's going to in the next 2 years, and it's going to bring 700 new visitors here a day from California, and probably a lot of those people are going to be people that wouldn't have come otherwise, or the traditional tourists that come here and don't like to drive, but they come anyway, so they'll be able to take the train.
Right, and maybe it'll create a little bit of a housing boom for Barstow.
Yes,
because it's becoming a little bit of a hub. If train stations are going to come there through California, there'll be services needed and things of that nature, and maybe people will stop. Unfortunately, you still don't escape the California taxes in Barstow, unfortunately.
Yeah. There's a housing shortage I talked about a couple of weeks ago. There's a housing shortage in California based on the housing restrictions that their government has imposed. And, they're over 1 million units behind what they should be. So there's a lot of people renting that want to buy and they can't buy. So then when they consider buying and they look at the tax ramifications and everything, they take the opportunity to move to Las Vegas. And we've talked to several buyers that have been under that scenario.
Right. No, you can't skate. There's taxes all around in California, and it's people are waking up to that fact, and with the Vegas now becoming a very viable city with sports, several sports teams coming here, not even just the Raiders, but there's rumors of other sports teams. So it's going to be interesting, definitely interesting, and so
definitely interesting.
Yeah.
And just want to give a shout out to Pinky Nose Naples. She did a fantastic class yesterday on finding glory in the Instagram story. And we had a packed house and she was awesome. I thought maybe, it would be maybe she said it'll be an hour and 45 minutes. The class ended up being 2.5 hours just because of all the interaction and the people asking questions. And so we're going to post that on Agent Formula's Facebook page and also on our website. So people will be able to take advantage of how you get glory in the Instagram stories.
Fantastic.
Fantastic. It was quite a class.
Well, good. Yeah, she's always very entertaining and a good, like a high energy. So it doesn't surprise me that she's able to get that much engagement.
So we have Sheila here today.
Yes.
Hi, everybody.
Yeah. Thanks for coming on again.
You're welcome. The lending lady here.
That's right. I forgot to say that. The lending lady, Sheila Merrill, the lending lady.
That's okay. Okay, let me go ahead and update you. We are one of the partners with Nevada e-housing department, and the latest update. Let me give you the update first before we dive into the loan program. So hot off the press as of yesterday, Hope loans, the Hope Brings You Home loans reserved as of Friday, yesterday, the 28th, were 200. 200 loans are reserved. These are stats from eHousing Directly, Nevada Hardest Hit Fund. DPA amount reserved, 3,836,251, and available funds right now are remaining at 14,063,749. So with that,
Sheila, what was your first number? What does your first number mean? The 200.
The 200. That's the number of the loans reserved.
What does that mean?
Yeah, what's that mean?
So in other words, when somebody is wants the program and finds a house, and we submit the loan to processing, our processing team reserves the funds for them, for their loan, for that property they're purchasing, and that's what that means. Loans reserved, Hope loans reserved.
Right. So property's already found and people are
property's found. Right.
Yeah. Okay.
Yeah. You have to have, just like with any property, any loan, in order to lock a loan or reserve funds, you have to be in contract.
Got it.
Yeah. So that says a lot, because the program started off with, it was over 50 million. So now it's down to 14 million.
Wow.
So that's quite a bit. And it started off, it went live on the 18th of February.
Wow.
Just little over 10 days ago. That's amazing.
10 days ago.
Yeah.
Wow.
And that's federal, right? You're talking federal.
What's
not
that?
Just Nevada.
This is in Nevada.
Yeah, this is the Nevada loan program.
Nevada.
Just in Nevada, that's awesome.
Yeah. So yeah, this is through Nevada e-housing, Nevada Hardest Hit Fund. So what we've got today, last week we talked about Hope Brings You Home. This week we have a comparison. I call it an old faithful loan. Home is Possible is the program that e-housing through Nevada, the state of Nevada, has had on for years, for a couple of years now. The new one that came live is the Hope Brings You Home as of February 18th. So I thought it was important to do a comparison. Right now, there are certain guidelines to fit into the Hope Brings You Home. And I think it's important to try to see if you fit into it so you can get your share of the proceeds for the down payment. The Hope Brings You Home, the biggest difference is Hope Brings You Home will give you as grant up to 10% of the sales price up to $20,000. That's huge.
Yeah.
And it's forgiven after 3 years. The Home is Possible used to do that, used to forgive it after 3 years, but now they've changed their guidelines. Depending on the program you go with Home is Possible, a portion of it is forgiven after 3 years. Then the other portion is either forgiven after 15 years or 30 years after, the life of the loan, basically. So this new program, Hope Brings You Home, is really hot right now. And if you are planning on buying a home, a primary residence, it's for only primary residences. There are income restrictions. There are debt to income ratio restrictions. Income restrictions for government loans on this Hope Brings You Home is $98,500.
That's a household. Right?
Yeah, the $98,500 for the income of the entire household for this program. That's the same as Home is Possible. And then it goes by for the conventional loans. We just call them, for layman's terms, they're HFA, but we'll call them conventional loans. It's the area medium income. So it's just around 54,000 and some change in Clark County. And then in Nye County, it's a little more, about 55 and some change. So bottom line, if you're thinking of purchasing, you really need to give us a call today, the lending lady at 702-505-0908. And we need to chat about this because it's not going to last long. Funds are already going.
Right. So
when you
go ahead, Ruth.
I just to clarify. So in 3 years, let's say I'm gonna get $20,000. And is that a second on my home for 3 years and then it's forgiven?
Yes, that's a good point. I'm glad you brought that up. It goes along with a fixed first. So it's not available with an ARM or any other kind of loan. It's a fixed 30-year first mortgage. The second, it's a silent second where there's 0% interest. There's no payments made. After 3 years, as long as you remain in the home as your primary residence, and there are zip code restrictions as well for this program. You have to be in certain zip codes. There's like 16 zip codes, so it covers a wide part of the valley. Then the loan is forgiven. Should you refinance the loan? Should you be relocated? Say you're a veteran and you have to vacate the home. Vacating means either selling it or you're physically not going to live there anymore. Then a portion of it is repayable. So it's divided into 136. So up to 36 months is 3 years. So if you're in there 2 years, well, then you have 12 months of whatever the grant is to repay at closing. Yeah.
When you sell the home, they just take it out of the proceeds.
Out of the proceeds, exactly.
That is amazing.
And just to clarify for the income here, because I'm reading the sheet, in Clark County, the $55,760, is that for an individual or the household?
That's for the household.
Okay. So to qualify for the Hope Brings You Home, the household cannot exceed $55,760.
Right. If you do the conventional. That's why for this program, most people I'm finding will fit into the government side.
FHA, VA side.
FHA, VA. Yeah.
What's your phone number, Sheila?
My phone number is 702-505-0908. So it's 702-5050-908.
And how much difference are the rates on the FHA versus the conventional side right now?
The FHA and the conventional side. Well, oh, you know what? I'm glad you mentioned that too, Max. No, I don't have it open, but as of Thursday, when I submitted, you did? Okay. The rates for the Hope Brings You Home are amazing. For the government part, it's 3.125. So three and an eighth. So 3.125% for the government. And then 3.625 was the last time I looked at it, like Thursday, for the conventional. Right.
Wow.
Right.
And it might have gone down yesterday. Does it fluctuate with the market?
No. It fluctuates based off of when Nevada hardest hit fund, they decide the rates. So their rates that they set have nothing to do with the market going up and down. It's when they decide to change it. Yeah. And if they make changes, if the market has gone down sufficiently, then they have their own, they can lower it. But yeah, but it's crazy. Yesterday, during the day, we get notifications from our lock desk from pricing that, yeah, there have been some improvements, a couple of improvements during the day in the interest rates. Mm-hmm.
Yeah, the 10-year treasury yesterday dipped down to like almost 1.2%, which is extremely low. So
yeah, it's the crazy times we're in right now, because I remember earlier last week, there was going to be no changes in the rates. Remember that? Yeah, the Feds were saying, and then all of a sudden we're hearing, oh yeah, up to 3 to 4 changes by the end of the year in the rate. So yeah,
it's very interesting. Very interesting. All that means is affordability just went up for a lot of clients.
Right.
Right.
Yeah, they can buy more home.
They can buy more home now.
So the fact that the price went up doesn't really affect the price they're going to pay monthly. That's what I think real estate agents need to be confirming with their buyers or potential buyers. Mm-hmm. So many things to video about, and put yourself out there on social media.
There are, yeah.
These are extraordinary times, and I think sometimes we can't see the forest for the trees or something like that. I always get cliches mixed up. I don't think like that, but anyway. But you know what I'm saying? I mean, we need to take advantage of it. And I think sometimes that realtors, and I'm talking about myself and John too, we think this is going to last forever. And then all of a sudden everything changes, because change is inevitable. And we are really on the cusp of having a change, because we have been on a run for 10, 15 years, Max?
Yep.
You're the numbers guy.
Yeah, I mean, 11 years now. I mean, 2009 was the start of the recovery. 8 was the crash, right? So from a business economic standpoint, the business cycle started, the low of the business cycles was 2011, right? 11, 12 was when the market and the economy started recovering. So we're still about 8 to going on 9 years here of the business cycle, which usually lasts anywhere between 7 and 10 years. But what's the difference between what we've seen today versus years past when we've gone through economic booms and busts is that, we have a central banking system now that continues to intervene. Historically, that's never been the case. So, with the advent of right after Alan Greenspan and going into Bernanke, the Federal Reserve System is really taking a significant role in interjecting liquidity and programs and lowering rates to continue this economic boom. So, I mean, who knows where this is going to go and how long it's going to last. At one point or another, it could just end up, corporate debt is a big issue right now. And that's rising to all-time levels. So we're, from in the financial world, we're always monitoring that. That's going to be the biggest risk. But on the consumer side, though, the greatest thing with what's happening with consumers, though, they've learned from their experience in 2008. And the balance sheet of consumer debt versus their income is relatively low, almost like at a 10, 15-year low still. So that bodes well for continued health on the consumer side. And that means, more consumption, both on housing and other stuff for the foreseeable future. But you got to be prepared. I mean, I think after all this activity in Vegas and, the building home prices, I talked to Ruth about this several times, through the last 2 years, is when medium household income and the average medium home rises above that 5 times level, 5, 6 times level. There's probably a little bit of a pause and concern, because either one, prices need to come down, or we're going to have a slowdown in price increase. And hopefully that happens this time. The difference between what we're experiencing now versus 03, 04, 05, 06, 07 is, we don't have stated loans, the liar loans
Right.
out there, right? So people still have to verify income. But I am hearing rumblings now, though, of some of that coming back. And I wanted to actually ask you, Sheila, there's certain what they call non-QM loans out there that are offering some interesting terms right there that are mimicking somewhat of what we've seen in the past, that has caused us, to go into some speculation mode here.
Mm-hmm.
Have you seen any of that on the mortgage end?
Not so much. I'm still hearing the rumblings. We do have a few investors that are offering, well, we've had this for quite some time, bank statement loans or asset depletion loans, where they qualify, a person can qualify based off of their bank statement, their deposits over a period of a year or 2 years. And then asset depletion is taking their assets for people that are that have stocks, bonds, that kind of thing. Have a financial planner that they work with, and have assets and in investments. That can be used as well. Haven't seen any of the funny money, the stated income, the no income, the Ninas, the Cisas, and the Santa Marias is what I call them.
The pay option arms.
Right. No, haven't really seen that.
Yeah.
And I think it kind of depends. You're going to find everything's back to basics. And a lender has to fill out clients, it's called an ATR, an ability to repay. So you have to fill that out, and that has to accompany every single loan right now. So I don't see us really getting back to any of the real loose program.
Right. Yeah, I don't think so too. I think if we have a slowdown, it'll be, you both have been around long enough to remember the early part of the 90s, when right after the savings and loans crisis of the late 80s. And then, we had that real estate, rates were still fairly high, 30-year rates at 8% in 1990 something. And we just had a slowdown, and prices just came down about 10-20%. Across the country. And I think that's really more what we would be entering, as much and less of this like complete just hysteria and people losing homes and things of that nature, because the equity, and there's a lot of equity right now. I look at my own just buying and consumption habits over the last 10 years. And, my wife and I just about a couple of weeks ago tinkered with the idea of possibly, moving and upgrading our home. But then we ran the numbers, and we thought about how the ease of, the comfort of what our financial situation is right now, and just, do we really need an extra bedroom? Do we really need a pool? Right. And then be house poor again. And it doesn't seem to be worth it, in our opinion. I think a lot more people are wiser to that, having gone through that process. And so if anything, things will definitely change. The industry in real estate is definitely changing, right? How people are transacting, how people are looking and finding homes. I mean, Zillow was the tip of the iceberg, that platform, as far as like changing the behavior and consumption behavior of how people start to look for real estate. But, the long game play of some of these companies, like Ruth said, these iBuyer programs that are coming up. I mean, they're looking to capture more of the revenue, as they should, as good businesses should. But the one thing that we need to, this is the reason why Ruth does this show and why she's building the center here is we got to prepare for that. And how do we go on the offense to combat all that? So, but
we're seeing a huge refinance trend right now, because rates are so low in the in the low threes, and a lot of people have equity. A lot of people that I am doing refinance for, it's not only just rate and term, it's cash out refinance.
Sure.
Exactly to your point, Max. They want to improve in the home they're in. And if your rate is 4.25 or higher, it makes sense to refinance right now.
Right. Because what is that? I forgot what the ratio was. If you for every 1% on 100,000, what's the payment difference?
Well, for every $10,000, just an estimate at 3.5%, just picking a number, about $45 a month for every 10,000.
Got it. Got it. Okay.
Yeah.
And what is it at 4.25?
4.25. So 4.25, 30-year term. It's about, hello, trusty calculator. I like to be exact.
Yeah.
So loan amount 4.25.
So we're doing still 10,000, right?
30-year, right? 10,000. So it's $5 more.
Okay, $5 more.
$5 more per 10,000.
Yeah, so you multiply it by the average loan right now is about 250,000 or so.
Right.
200,000. $5 times what, 20? Right? 20. I mean, that's $100 a month that you'd be, saving in interest, and amortize that over, 20, 30, 40 years. And that's how much you're paying extra. So it's definitely time to, if your rate's over 4, you may consider. And if you're in an FHA loan like I am right now and paying MI for 11 years, right? You should definitely start looking to refi, because on top of the mortgage payment, you save that extra $100+ on the mortgage insurance as well, that you don't get back, that you don't get to write off anymore because the standard deduction is too high.
If you've had your loan for 5 years or more and you have MI on it, the chances are very good that we can get rid of the MI.
Yeah, exactly.
Just because of the market, the way the market, appreciation and equity.
Yeah, absolutely. Absolutely. Any other last thoughts on this down payment assistance program that people need to know? And
I think they need to take advantage of it right now. And I think it's really important to give me a call. It's like, or whoever you are working with, whoever you're comfortable with. You want to find somebody who you're comfortable with, who's going to tell you the truth. And that's my motto. I take care of my clients and so on. But the down payment assistance program will not last. It comes around every so many years. We had this a couple of years ago and it quickly ran out of funds. This will be gone in less than a month.
Yeah, so it looks like it. More than half of it gone in 2 weeks.
Take advantage of it now, right? Yeah. Owner occupied, if you're looking to purchase owner occupied, you're going to live in it for 3 years or more. If you're flexible to zip codes in the Valley, and if you make under, I'd say 97,000, 98,000, what else? That's basically it. The rest of it's pretty easy. I can help you figure out what to do to qualify. We also have a credit services department that, if your scores are not quite there, can help you get into Hope Brings You Home or Home is Possible. Right. So there's options for you. So a lot of options.
So 660 FICO is what I saw on the sheet, right?
Right. Yeah. Okay. For Hope Brings You Home, it's 660. For Home is Possible, 640.
All right. Fantastic. Right. Fantastic.
Yeah. Depending on how much you want assistance with. Yeah.
Right. So Ruth, any other thoughts today or any topics?
Well, I just, no, I think we should wrap it up. And I just want to tell everybody that this is going to be posted on facebook.com/AsianFormula with captions by tomorrow. So if you want to watch it tomorrow and digest some of this valuable information, please do so. And also, we're going to have our Asian Formula Strategy Academy social media class is coming around next week, and it's Wednesday, Thursday, Friday from 10 to 2. And if you're interested, just please go on LasVegasAsianFormula.com, click the training tab and sign up, or you can even call Marie and she'll register you and save your seat. So it's going to be pretty exciting because we've learned some new things and there's some new things going on with the platforms. So I really encourage agents who've taken the class before to come back. And if you've never taken it, you really need to take it. So yes. It's not going away. It's just going to continue to be filled with competition. I see more and more agents out there using social media and staying in front of the clients, which on one hand, I love it because we're keeping the iBuyer platforms at bay. And on the other hand, from your perspective, you better get on the social media platform so that you don't get left behind.
Yeah, absolutely. Absolutely. So thank you, Sheila Merrill, the lending lady from Nova Law Homes, for joining us this morning. And we will see everybody next week on Saturday.
Bye. Thank you.
Bye, everybody. Have a great week. And this was an extra day today, so be out there.
Ah, right. Leap year.
It's leap year day.